Good morning. For Traders Exclusive, this is George Kachuk with RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. And what I'd like to do is talk about the equity markets this morning. Well, in equities, the uptrend continues, and perhaps the best thing that we're seeing is that market breadth is tremendously improving. And what we're seeing this by when we look at the advanced decline line on NYSE, it's actually leading the S&P and the NASDAQ. That's a really good sign because in the summer, basically, we saw a divergence where the advanced decline line was declining while the market is moving sideways. Now, actually, that has bottomed and is moving up. That's a very good sign. Also, the percentage of New York Stock Exchange stocks, the NYSE stocks percentage above their 200-day moving average is up to about 85%. It's a very bullish sign considering we're down at 20% probably just about 6 weeks ago. Also, the percentage of stocks above their 50-day moving average is up to about 44%, and that's higher than we were in October. So it's again a very good sign. So this rally is broad-based. We see the transports leading, the small caps are participating, so all that's very good. The one slight drag still is that the leading stocks continue to come from defensive sectors or industry groups, meaning utilities, staples. Those are the stocks that are hitting new highs. So that's not the ideal situation you want to see for a really rip-roaring rally. However, there's a lot of technical damage, so this will take some time to clear itself. Basically, we saw the S&P go through the 2,000 level, move a little sideways, consolidate that, and now we're up around the 200-day moving average, closed just right at the 200-day moving average on Friday. And now we're probably going to move a little bit more sideways, digest those gains, and look to see if we can move higher. Friday, we had a really nice rally in the indexes. The only thing was missing, of course, was the volume. So that's sort of a bit of a negative, but that's still all right. You know, it's not going to go straight up just like that. So, and also some of the other positive signs we're seeing as we look at the high yield bonds. If you look at the ETF, HYG, that's moving higher. It's a really good sign for stocks, as is the corporate bond ETF, the LQD. So you look at all these things combined, you see that the breadth, the overall rally is expanding and moving higher. Now, again, one of the things that we're not seeing is the growth stocks that are breaking out. They're stalling a little bit. They're right at their pivot points. However, some are starting to make progress. A few weeks ago, we talked about Intuitive Surgical, ISRG, and it just muddled around this pivot right around that 565 level. And finally, it's breaking free that area. I believe it's trading above 590 this morning. So that's a good sign. Some of the stocks I talked about last week, Max Linear, MXL, still at that pivot, hasn't broken away. Or Maycom Technologies, symbol MTSI, did actually move above its pivot and staying above there. So that's a good sign. So the trade we're looking at today is Broadcom. The symbol is AVGO. And we're looking to see if we can take out that 150.5 pivot point. Basically, it peaked there last May, right at about 149, corrected with the market, tried to break past this area in December. Again, met resistance right about that 149, 150 area. Then it came in with the market corrected. However, now it had a nice bounce. Its relative strength line is leading. So that's a trade that you should consult your financial advisor if this is for you. If it takes out that 150.5 area on big volume, that may be a stock that's going to be going forward. It's to be seen. So as always, keep your eye on stocks like some of the leading NASDAQ stocks like Facebook. See, it's also kind of stopped at 110. See if it can get through that area, and that might tell you something about the whole general market. So, in summary, market breadth is improving. Look for stocks that are nearing their pivots, trying to break out, some of the high growers. If you're a short-term trader, you know, you might just want to go easy on these. And of course, if you're a longer-term trader, you could still be looking at some of the stocks that got a little bit beat up in the biotech sector. They have some great fundamentals. So as always, let price and volume be your guide. This is George Kachuk, we're RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great week trading.